I'm here today to talk to you about UK audit requirements for a UK company that is part of an international group. So, if you're looking to set up a company in the UK, it's really important to be able to understand the UK audit criteria because it's a bit more strict than some other countries around the world, and it's important to understand. So in the UK, any company that breaches the small company threshold requires an audit. And if you're part of a group, you have to aggregate the criteria of the whole group in working out if you qualify as a small group. On the screen, you will see the small group qualifying criteria. This is broken into two sections. It's either net, which means on a consolidated financial statement basis, or gross, just aggregating up each line of your TB to get a gross figure. This counting is for periods that begin on or after the 6th of April 2025, and this is the size criteria for a small group. All international companies included in this group. And you must not breach at least two of these criteria in order to qualify as small. So the criteria are aggregate turnover of no more than 15 million net or 18 million gross sterling, a balance sheet total, and that means not net assets, that means total assets. Total assets no more than 7.5 million net or 9 million gross sterling, and an aggregate number of average employees in the year of no more than 50 employees. Now, if you've got lots of part-time employees, a person is one. So it doesn't matter about a full-time equivalent. No more than 50 people. And so if you breach 2 out of 3 of this criteria, you require an audit for any companies you've set up in the UK. There are some other ineligible criteria, which means even if you were small, you would still need an audit in the UK. Dormant companies do not need auditing. So you could set up your company in the UK in readiness for trading in the UK. And until you actually were no longer dormant, you wouldn't need an audit. So that's a good advice in order to prepare for moving to the UK. There is also a parent company audit guarantee exemption in the UK, which means that if you have a UK group, only the parent in the UK would need to audit consolidated financial statements, and the UK subsidiaries could be exempt from audit if you're happy to give the parent company audit guarantee. If you need any more information on this, please speak to your advisor who will be happy to help. Finally, within the UK, most companies report under FRS 102, which is UK GAAP, but there is the option to use IFRS. Up until recently, there were some substantial differences between IFRS and UK GAAP, but for accounting periods beginning on the 1st of January 2026, FRS 102 has changed and is much more closely aligned now to IFRS, to the extent that in many cases there would be unlikely to be any adjustments for group reporting purposes to align a UK GAAP company into IFRS. However, there are still some major disclosure reductions under UK GAAP when preparing the financial statement, and this could save on cost of an audit and accounting preparation. So it's worth knowing, and UK GAAP should not be ruled out when preparing UK companies for international groups. Thank you for listening. If you have any questions, please contact your Kreston Reeves representative.